Today, we're talking about a pharmaceutical company that is developing some of the most important drugs to combat some of the worst diseases on planet Earth. Everything from arthritis to Parkinson's and even Alzheimer's. We're taking a look at Abbvie and how they're changing the game in the biopharma industry. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. Abbvie has an odd history. Spun off from Abbot Labs in 2013, Abbott originally did both drug research and medical device manufacturing. However, the company made the decision to separate the drug manufacturing segment from the devices segment, creating Abbvie, so the companies could be valued independently. Some claim Abbott spun Abbvie off to avoid potential revenue loss from the drug segment that would eventually occur that would affect all of Abbott. Well, no matter the reason why, Abbvie is now a multi-billion-dollar pharmaceutical giant. In 2014, quickly after its detachment, Abbvie attempted to acquire Shire, but the offer was ultimately rejected. Next year, in 2015, according to the New York Times, Humira had become the best-selling prescription drug in the world. And that wasn't the only one. Since then, Abbvie has released several blockbuster drugs to market and made several multi-billion-dollar acquisitions. Regardless of a few run-ins with regulators over a couple of drugs, Abbvie actually has a solid reputation. Now let's see if that reputation is reflected accurately in Abbvie's finances. First off is revenue growth. Starting in 2015, Abbvie raked in $22.86 billion in revenue, and as of the close of 2020, the company brought in $45.8 billion in revenue, more than doubling its revenue from just 5 years ago. Pretty impressive for a company of Abbvie's size. Second up is shares outstanding. Unfortunately, it's going up. In 2015, Abbvie had 1.63 billion shares outstanding, whereas now it has 1.67 billion. This is very slight and breaks Abbvie's 4-year streak of share buybacks, but it is somewhat understandable with the giant acquisitions they've made in the past couple of years. Up next is free cash flow, and in 2015, after all expenses deducted, Abbvie had $7 billion in free cash flow. Now, just 5 years later, Abbvie reported $16.8 billion. In other words, the company's free cash flow increased faster than its revenue. Always good to see. Following that is current assets versus current liabilities. Abbvie's current assets stands at $26 billion against $28.86 billion in current liabilities. This all comes with $8.6 billion in cash. And for the first time ever on this channel, we're looking at a company with more current liabilities than assets. And while these debt levels are certainly concerning, Abbvie just pledged to pay off almost $20 billion of their debt by the end of this year alone. So honestly, not too worried about it. Moving on, we get to free cash flow evaluation. If we take the average of the last 5 years of free cash flow at $11.67 billion and multiply it by 20, we get an expected market cap of $233.4 billion. Currently, Abbvie's market cap is $188.63 billion, so according to this metric, Abbvie is undervalued. With that said, we have ROIC and dividends to look at last. Abbvie's ROIC over the last 5 years is 10.5%, so just barely above our 10% goal. However, their 2020 return on invested capital was a solid 16.1%, which indicates things are improving. Finally up last are Abbvie's dividends. While Abbot Labs paid out dividends for 47 consecutive years, Abbvie of course only has an 8-year streak. Its dividend yield is 4.87%, which means $1.30 per quarter is paid out and a total of $5.20 per share per year. Abbvie's payout ratio has risen, but it's a comfortable 41%. And over the last 5 years, Abbvie's dividend has grown on an average of 18% per year. So overall, a strong dividend payer, but we'll see how long that lasts. Knowing that Abbvie has a relatively strong balance sheet, we're moving on to the meat of things, whether or not you should invest in this pharma giant. Of course, we need to first look at the most important aspect of any drug company, an area paramount to its success or failure, the pipeline. In the US, anytime a pharma company develops a new drug that gets approved by the FDA, it's given a patent lasting for 20 years. This is a simplification of the process, sure, but for Abbvie's Humira, the patent is set to expire in 2023. Humira accounts for a whopping $20 billion of revenue. Once lost, Abbvie faces the monumental challenge of regaining that revenue. Abbvie has a fairly impressive pipeline though. As we can see here, Abbvie has over 50 drugs in various stages of testing and approval. Admittedly, these drugs are slight variations on already approved drugs for various other diseases. Take Rinvoq and Skyrizi. Both names appear frequently and both treat all sorts of diseases. Each one needs its own approval. In fact, if approved, Rinvoq and Skyrizi are the best shots Abbvie has at replacing some of the revenue lost from Humira's patent expiration. Both currently account for just over $1 billion in revenue. But Abbvie projects that by 2025, both drugs combined will draw in about $15 billion of revenue. Though not as much as Humira, it's still a good chunk for a solid replacement. Another drug in the pipeline in phase 3 trials is the drug by the super catchy name of ABBV-951. This drug aims to treat Parkinson's disease, and if you're not sure what that is, Parkinson's is a neurodegenerative disease that affects both motor functions and non-motor functions. There is no cure for Parkinson's, but if ABBV-951 is approved, Abbvie would be entering a relatively unsaturated market, and the potential for success could be great. If you're interested in learning more about Parkinson's disease or Alzheimer's disease, check out the links in the description below and go support the cause. Yet Rinvoq, Skyrizi, and the new ABBV-951 aren't the only ones in Abbvie's pipeline. Also in phase 3 trials, Abbvie's Vraylar aims to treat Autism Spectrum Disorder pending approval. Two others are AL002 and AL003, which are in phase 1 trials. These two would compete with Biogen's controversial adiminicab to treat Alzheimer's disease, a type of progressive dementia that impairs memory, behavior, and cognitive ability and worsens with age. Partnering with Mission Therapeutics, Abbvie is pushing forward with treatments for Alzheimer's which could change the way we treat this debilitating disease. Another way that Abbvie seeks to replace the revenue lost from Humira is with acquisitions. You may have heard that Abbvie acquired Allergan last year for a whopping $63 billion, hoping to pay the purchase off in multiples of revenue. Allergan makes all sorts of drugs, but predominantly features in medical aesthetics like Botox and Botox therapeutics. Other offerings include drugs in neuroscience and eye care. Overall, this results in a roughly $16 billion business. Also, just months after being acquired by Abbvie, Allergan itself acquired Soliton for $550 million with the aim to expand its body contouring portfolio. Ultimately, all this amounted to a huge spike in Abbvie's revenue in 2020 and 2021. While this is all well and good, we need to look at some of the not so good things happening at Abbvie too. In recent years, Abbvie found itself in some regulatory turbulence with its rival product Xeljanz. Meant to treat rheumatoid arthritis, Pfizer's Xeljanz hit the wall when the FDA reviewed and issued warnings to all drugs related to Xeljanz, including Abbvie's own Rinvoq. Rinvoq is also meant to treat rheumatoid arthritis. As a result of these warnings, Abbvie's stock dropped some 7% the very day the warnings were issued. Now, I don't think this is necessarily a nail in the coffin for Abbvie, and really I don't think it'll affect the company all that much moving forward. What concerns me most with the news is how easily affected Abbvie and other drug companies are by things like the FDA and so on. That was a 7% drop in Abbvie stock in one day. Add this to the ever-present ticking clock of patent expirations. If Abbvie and other pharma companies can't fill in the gaps between these patent expirations for their drugs, they'll quickly land in some boiling hot water. These are what I think are the biggest risks for investing in Abbvie. It's for these reasons that I generally stay away from big pharma companies in general. I'm no expert in the medical field or in drugs. It's nearly impossible for me to gauge the efficacy of any particular drug, let alone the drug pipeline. The only stock for a pharma company I've ever owned was Bristol Myers Squibb. You can check out my thoughts on BMY by clicking the card in the top right. For a long time, I thought BMY was really the only good pharma company out there until I started researching Abbvie. Honestly, I think it has the same potential as Bristol Myers Squibb. While Abbvie faces revenue loss from the patent expiration for its blockbuster drug Humira, I'm sure what the company will come up with in the future, whether for Parkinson's, Alzheimer's, arthritis, or more, will carry it through, but only time will really tell. But for the time being, I won't be invested in Abbvie. My uncertainty of the pipeline and all that entails urges me to wait until Abbvie stock hits around the $90 range to have a larger margin of safety. When that happens, I'm sure I'll pick up a couple of shares. Well, that's all I've got for you in this video. As always, leave your thoughts on Abbvie in the comments below, or have a conversation with with my community on my Discord, link in the description. Until next time, I'll see all of you in the next episode of Dollars and Cents.